What's up, guys? It's Pac. Welcome to another market review of May 6th, 2024. That's a Monday. Guys, again, we're doing these market reviews on every single day in the month of May. So if you can go ahead and hit that like and subscribe button, that'd be awesome. Let's get right into it. So, guys, as we can see, these blue circles, per usual, this is our structure on the 1 minute, and you can see that we're currently bullish. We're currently bullish going into market open with the break above that high. Now, you'll notice I have this zone, this previous zone in blue marked out, and you can see that we haven't even used the 30% of that zone yet, and so we're going to consider this zone completely unmitigated. So what I was looking for on open was potentially a trade back into this zone to mitigate it to continue us higher. So this is where a fake flip might occur. So if we were to say close below this low and price were to close here, that would be considered a fake flip in my eyes. Why? Because we flipped directly into a completely unmitigated zone. So I would still be expecting here. So as we play price into open, this green line is open. You can see the candle right before open, we do get a push here and we get a close. So we have further continuation. There's no structure within here, so this is all non-structure. So we can see that the open candle does exactly that. It digs down and it breaks structure. So we have now a protected high. Where? We have a protected high at this high. We have a protected high at this high. Remember, we're expecting this to be fake. Why? Because this zone is completely unmitigated. If it hasn't hit at least 30%, it's completely unmitigated. If it hasn't hit 50%, then it's definitely unmitigated. Remember the rules in the, I believe it's video, maybe 3? I believe it's video 3 in the playlist is if it hits the 30%, it's going to go either 30-70 or it's just going to use the 50. So we can see this first tap around 30. Tries to give us a push up. We still are closed here. And we go right down to the 70. We get a close underneath this bearish candle. So which candle are we trying to validate for the high? Or for the low, we're trying to validate that candle right there. I'm going to put it in a different color. I'm going to put it in blue. That would validate our low, and since we're anticipating this to be a fake flip, we're going to anticipate these highs to get ran. There we go, we get our flip. So where's our valid low? Our valid low candle is now here. If it decided to trade back in, if price decided to trade back into here, I'd be longing up into that direction. Regardless, we're expecting this to get ran. I'm going to make this a different color so it's easier to see. And you can see that's exactly what happens is we wick it and then we close it. So now we have further continuation to where? Further continuation to the upside. So what does that make this swing here? This makes it our last swing point right here. We'll put this in gray. So we have our last swing point here. So we're bullish. We're 100% bullish. We should only be looking for bullish trades. You can counter trend, but you have to be a little bit better at the counter trend trading. You just have to expect continuation in bullishness. So we're pushing up. We're waiting for a valid high to get put in to push us back down. Okay, we got a valid high there because we closed underneath this candle. So we're expecting it to trade what? Back into this area. And I believe on a smaller time frame we had our SNDR. I think it was just ended up being this wick here. So I believe that we get a bounce out of here, which would make sense, right? We break the zone. We anticipate a trading off the SNDR. So again, when would we go bullish though? Regardless if we're expecting a bounce here or not, or we're expecting a lower, when would we anticipate, I can possibly look for longs again? We're waiting for a valid low to occur. We're waiting for a valid low to occur, which would currently be closing above this candle. Still that candle. Still that candle. And it closes. Oh, no, it didn't close there. Let's see if it decides to close on one of these other ones. Okay, it closes. So what's the expectation here? The expectation is that price should continue upwards. It should take out this high. This is still what we were anticipating because remember, we're always anticipating continuation until it fails. So now once we close this, we should anticipate this high to get ran. This high up here at like 101. Boom, that's exactly what happens. We're wicking it, and we put in, it looks like we put in a valid high with a wick. We do. So we put in, so we should anticipate this to do what? Trade back down into the origin, which happens to be the same candle here. So we should anticipate it trading back into the valid low, which happens to be our origin at this point. Okay, that doesn't occur. That's okay. But we do get a break. I saw a lot of people yesterday missed this break right here. They missed this break right here. We have to know that that is a break in continuation of structure. So what does that mean? That means that we have a new swing point now here, there. And so we still have the origin here. And what do? We're bullish. This is no longer a range style. This is bullish. Sweet, we tap right into our origin. What should we expect here? Some sort of flip on a lower time frame, a valid low on this time frame to come out and do what? Run these highs. Run those highs. Boom, there's your valid low. Valid low didn't close yet. It's got to close this candle, I believe. It's got to close that candle. I believe it was right on it on this one. And we still run the highs. So there's a valid high, a valid low. So what does that make this? This makes this a swing. That makes this a swing. There. These are actual structural swings of full structure. So what does that mean? That means we have a new zone. It looks like this one got tapped at 50%. So we have a new zone. Where? We have a new zone here. So what should we expect it to trade back into here and then continue structure? When we get a tap off 50, gives you a 1-to-1. So if you're a 1-to-1 trader, congrats. There's no valid high yet. No valid high. There's a valid high occurred right there. On the close, right there. A valid high occurred. And then immediately a valid low. So what does that make this? That makes this a new what? A new swing. As long as we close above, which we do there. So now we have a new swing. I know a bunch of you guys missed this. I saw it yesterday. Trade right back in. Looks like you might have gotten a 1-to-1 there. And then look at that. Look at that, guys. We get a break of structure. A break of structure right there is where we get our break of structure. So what does that mean? That means we have a protected high right here, which means what should we anticipate? We should anticipate price to trade down. And since this zone here was already mitigated 50%, and since this zone here, I think it missed the 50% by a tick, we would expect minimum that this low gets ran out. Minimum that that low gets ran out. And I believe that's what ends up occurring. That low gets ran out. So now that we've shifted structure, okay, we've shifted structure, we've put in a new low, a new high. What does that mean that we have here? We have a low and a high there. So it means we have what? A new zone. We would just move this down. This would be our new zone. Let's change the color. Now we have to remember that even with this new zone, we have this previous zone that hasn't hit 50%, so still unmitigated. So we can still go up there. So regardless, if we trade up here and break, we're going to anticipate it to trade back down. Why? It's the same reason as here at open. The same exact reason. It's flipping into an unmitigated zone. It's flipping into an unmitigated zone. There you go. You get your valid low occur here. Trades right into it. You'd expect it to go run out those highs. And that's exactly what occurs. Now, I'm not sure if you can see this. Let me clean this up so you guys can see this a little bit better. We have to remember where our valid points were. And our structure was. I do not believe we get a close. No, we did not get a close above. So there's not a shift in structure here. There's not a shift in structure bullish. So what is the expectation of this low? Or of this high? The expectation of this high is to put in a new low. And if that fails, what should we do? We should enter a state of range. If that fails, we should enter a state of range. How do we know when it fails? It's when it does what? Puts in a valid low before it closes where? What are we trying to close to make sure that we continue bearishness? Well, it's going to be this low of this bearish candle here. It's going to be this low of this bearish candle here. Right there. So if we close that, then we continue. If we fail, then we're going to run the highs and we'll be in a state of range. And when do we know? It's when it puts in a valid low. And there's your valid low occurs right there once it closes above here. And so what would you be expecting? The expectation would be to run these highs. Again, what is this up here? Is this mitigated? Did it tap 50%? No, so it's completely unmitigated. So if it runs those highs, what are we expecting? Well, we're expecting it to run the lows. Why? Because on a higher time frame, this is a higher time frame range. This is a higher time frame range. And what do? We run it. We even get a close above, so technically we have a protected low down here on the 1 minute structure. You have a protected low down there. And again, we're going to anticipate it to do what? Trade back down to the bottom of the range, which would be somewhere around this protected low on this time frame. You have your entry on your valid high right here. Comes back. And it looks like, there you go. Ran it and it closed. So what does that mean? We have a flip back down. So that is going to be our protected high right there. So if that's a protected high right there, then if we shift back, that's going to make us bullish above that high right there. Now, you have to keep in mind that this is a higher time frame range. If I go up to the 12 minute, I don't want to spoil it too much, but if I go up to the 12 minute, you can see that we're still trading within the range of this candle. I'm going to draw it out this way and turn it red so everyone can see. We're trading within the range of that candle. So if this is the candle we're trading within the range of, anything below the idiot box, it's an idiot box, would be the bottom of our range, which again would be here. And anything above, which would be this candle that I have in gray, at the top side, would be the top of the range. Because you can clearly see that's below this, and that's above that. So even if you've seen a common theme, right? Shift one way, shift the other way. Shift one way, shift the other way. We would expect that to continue until it doesn't. Expect it to continue until it doesn't. So it swipes something at the bottom of the range. If a valid low occurs, what are we going to expect? We're going to expect the top of the range to get ran. We're going to expect this to get ran. Why? Because it's the extreme liquidity inside of the range. Boom, there's a valid low occurs. Right there. Sweet, so if it comes back down to there, what are you doing? You're longing this back up to the top of the range and to take something. You're longing it back up to the top of the range and to take something. So if it comes back, there you go, taps it, you're looking for longs. If you need a secondary confirmation, you just look for a secondary valid low to occur, which occurs right there, and then right back up to the top of the range. And you can see we close. So what does that make this low? That makes this low a protected low. So now what do we have? We have a new swing. We have new swings. And we've closed out the top. Now remember, when do we know that we are going out the top or going out the bottom of a range? It's when we close the first failure swing. When did we close the first failure swing? There. That's the first failure swing. Okay? Because it didn't do anything. It didn't Continue or it didn't break structure. It's a fail. So once we close that, we know that we should anticipate trading up here. If you don't understand that, you need to go back and watch the range video because I explain it very clearly on how you know. So we have a new zone. Let me actually remove all these drawings. We have a new zone here. We have a new zone here. And you have to remember, it's actually not there, it's right there. We have to understand that until on a 12-minute time frame, let me go back to the 12-minute so you can see. You see it on the next candle, but it's okay. Until we close out of this candle, I'm going to make it red again. Until we close, we're stuck in a range. Once we close out the bottom of this candle, then we would have a valid high on the 12-minute. If we close out the top, which we do twice on these candles, what do we have? We just have new candles that we're trying to validate. That's it. We just have new candles that we're trying to validate. So if I know that, I'm just going to go ahead and mark these out. This would be the low that we were trying to validate on the 1 minute. It hasn't occurred yet, but you'll see. Okay, I believe this is when it closed. Yeah, right here. This is where that 12-minute candle closed. So is there any structure on the 1 minute in this area here? No, the answer is no, because it didn't close below that bullish candle. So what does that make this low? Also non-structured. So if the 1 minute puts in a high here to pull back into this zone, what should we expect? We should expect at least a run of those lows, at least a run of those lows. So it occurs right there, right? We get a break of it right there, of that high. So we should expect those lows to go get ran. Boom, there you go. Now, keep in mind, what just happened once we close this low? I believe it happens on this candle here. Well, now we have a valid high on the 12-minute. If we have a valid high on the 12-minute, what should we be anticipating? We should anticipate low or shorts to start occurring. Now, what did we just do here? We took the extreme of the range we were just playing, right? We took the extreme of the range we had been playing. We took the extreme of the range that we've been playing. In this scenario where it's just bouncing back and forth, if I go up to a higher time frame, it would be easier to see. You would also expect this to get taken. Why would I expect that to get taken? Because look below. What do we have below? Inside this ranging environment, we have a zone that is completely unmitigated. Completely unmitigated. Okay? So if it decides to take these lows, you cannot be surprised that if longs came back, even if this shifts back lower. Why? Because it's tapping into a completely unmitigated area. It's tapping into a completely unmitigated area. And we'd anticipate for that to occur somewhere around the 50 or 30%. Why? Because that's the first zone that always gets tapped. That's the first zone that always gets tapped. So let's see what happens. All right, so there we go. We tapped the 30. So even though we've broken lower, it's a flip into a completely unmitigated zone. What do we expect there? We expect it to be fake. We expect it to be fake. And this is what people call search and destroy conditions. It's those constant fake flips, constant fake flips, constant fake flips. We just have to understand why they occur. So once a valid low occurs, which it does right there, what should I be looking for? I should be looking for longs. I should still anticipate the highs to get taken. There's your tap back in. And what do? We long all the way back up to the top of the range. All the way back up to the top of the range. All the way back up to the top of the range. And we finally put in a valid high. You have to understand, on this whole entire run up, there is no valid high occurs until this candle closes. So I couldn't even try to short, even if I wanted to, until that candle closed. I wouldn't even be able to try to short until that candle closes. And what we have is we get a push right back and closure. Continuing bullish structure. So again, what are we going to do? We're going to still anticipate what? That price continues bullish. That price continues bullish. So once we get the valid high, which we get here, all we're waiting for is some sort of valid low to occur so we can continue. That's all we need. No valid low. No valid low. Still no valid low. Still no valid low. Still hasn't occurred. There you go. Valid low has now occurred. Right there. On that candle close right there, a valid low has occurred. So what's the expectation? Very simply, the expectation should be what? That price puts in a new high, because the first expectation is always continuation. The first expectation is always continuation. And there you go. We put in a new high. So what does this low become? It becomes protected. Once we put in a valid high, what should we expect? Once a valid high occurs, we just want it to trade down, so it puts in a valid low. Once a valid low occurs, what should we expect? Continuation. Continuation. No close. There's your valid high, occurs right there. Valid low occurs immediately. And let's see what happens. Continuation. Shocker. It does the same thing every day, but people lack attention of what's going on. They lack attention of what's going on. So same thing. What are we going to expect? We need a valid low to occur, which is a high occurred there, waiting for a valid low to occur. And still no valid low. Still no valid low. Still no valid low. Valid low occurs right there. So what's the expectation? I would expect continuation. Oh, and look at that. Get more continuation. All right, same thing. Valid low occurs here. Valid high occurs, sorry. Valid high occurs here. Up here. So now we just need a valid low to occur. Once a valid low occurs, what can we expect? Continuation. So valid low occurs, yep, right there on that candle. I believe, let me zoom in, make sure. Yep. Valid low occurs right there on that candle. Make sure close there. What should we expect? Continuation. Boom. Right into that wick. Right into that wick. Let's see. So it hasn't closed yet. So let's see if it gives us continuation. Nope, didn't give us any continuation. So what should we expect? We should expect a state of range. So now where are we at? The bottom of the range. Should we get a bounce here? Yes. The answer is yes. And then we went back up to the top of the range. Here's your failure swing. Down to the bottom of the range, take something out. If it takes something out and gives you a valid low, what would you expect? Probably trade back up to the top of the range. Wow. Back up to the top of the range. What probably happens after that? Trade back to the bottom of the range. And we trade to the bottom of the range. What probably happens after that? Trade back up to the top of the range. And when was actually the first failure? The first failure was here, so we had closed there. So what's the expectation? Eventually trade out the top. There you go. And then you get a protected low that ends up occurring here. And that ends up being pretty much the rest of your day. It just starts running straight up. I think too many people are getting caught up in areas like this, which if you just follow the structure and you understand your high time frame and you understand things like that and your expectations, then when price gets into something like this and you know that it's finally trending, then you'll be able to trade it a lot better. So it's all coming down to what's supposed to happen, what's the logic say, and just following the logic no matter what you feel or what you think. Okay? So guys, that's it for this market review. I'll catch you in the next one.